Hi traders, Nick here looking at Roku again. I have beef with one comment. Actually, she, Martin is God, had issues with something I said about Roku. Apparently in one of my videos I mentioned $35 a share. I don't remember that, but whatever. Don't have time to rewatch everything, but he's mentioned specifically this particular video, which I did last. And I don't know how he can have beef with it. It was on 512, and I warned about buying I literally said I'd rather miss $7 of upside than to grab $7 of downside. And if somebody had watched the video and protected themselves, they would have protected themselves from 15% decline. I tracked it perfectly. In fact, where is it? This was my chart of it, and I said how it would happen, and it delivered more than delivered. Okay, so, I understand being picky, but fucking A, it's just, what the hell does that guy want? Apparently he knows God, and God has better calls than this. So back to the chart itself. This is the downside that has been lingering for a while. They avoided it here, they just delayed it, and then came back, touched it perfectly, this one. And then on 512, I think was my last video on it, which was up here. And I said that it's more likely that it's going to fall apart than to basically don't anticipate the bounce, play the levels versus the trend lines. Because at that time, I think it was drawing a descending wedge, which looked like it could, where is it? Okay, somewhere here. So it was a descending wedge bouncing against a prior coming to a prior bounce line. So usually when you have that kind of thing and it's a pretty good stock and it has momentum and then it just bounces hard because of a trend line break, I said I'd rather wait for the level break and chase it. So in other words, for my own portfolio, I would not have chased it up. Instead, the breakdown happened and then it delivered it and then some. So this tells me that, okay, it has a chance of basing here. But I still have no reason to buy it. It's usually when somebody buys a stock, is they have a reason. Either they love it for the long term. That's a reason. You don't need a trigger for that. You did your homework. You love it. You bought it. Or technically, you see a hard base. So I believe in the base. I go. Well, this is not a hard base. This is a base with a giant gap below it. So the markets have been never stronger for the NASDAQ. Literally, they set all-time highs almost in a crappy situation. So they're pretty strong for froth. They're buying risk hand over fist. Not only risk, COVID risk. This is like the COVID stock. Everybody's stuck at home streaming. This company can't still make money off of this. That is bizarre. And that's been my beef with it fundamentally for the longest time. But I said I'll swallow that pill. And I say, I'll give it runway because now the platforms, the habits are different. Everybody wants to stream everything. So maybe the first 10, 13 years of its existence, it didn't really have the good setup. Now it does. So I'll give it a pass on that. But technically, this is not a strong base. It is a base, but maybe not as strong as people think it. So that's the second reason you buy it. Or you have a trigger. And I don't see a trigger. I'm going to go down to a 5-minute chart to see. First of all, the sellers are in charge, no doubt about it. Every bounce is going to be sold until the behavior changes. How does that change? It sets a trough. So here are 3 bottoms. So if it can start making, when you set a trough, is you stop making lower lows. But here it stops, takes a platform, then takes another platform, then another leg lower. So it needs to start making, this is step 1. Step 2 is start to make higher lows and eventually higher highs. So I will take higher lows and lower highs. That's how you come into a pinch. But then, see, lower highs, flat, that's good. Then you come into a decision point and you have to say the bulls are ready to take over the reins and start making higher highs and higher lows. There's no evidence. So you need a trigger, either earnings, something. It's got to trigger this thing to flip over. So this is a 5-minute chart. Let's go to a 15-minute chart. Same story. 30-minute chart. I'm trying to find a trigger. I don't have a trigger. So it's going to be an unforeseen headline of sorts for this particular stock, or just a miracle, really. Miracle trade to trigger something. So I tell you one thing, I'm going to put an alert right here and say, hey, let's look at the stock once it loses this level. Because if it loses this level, it's probably going to go to my second alert down here. What does this say? Buy the dip with a question mark. The question mark is because it's so close to this gap. Will they want to touch it or not? Maybe they just go to $3 million right from here, Mr. Martin's God. So it is, it's a matter of faith. You either want the stock forever and you've been waiting for a dip to buy it, then that's probably a good idea. Otherwise, there's no technical reasons for me to buy it, other than if you probably chart a harmonic. And if you're good at that, maybe you can find some sort of hope. And according to my chart, only a daily has hit a target, a regression target to a level. So I don't have any upside harmonics to warrant me taking a bet on it, not even on an extension like that. So what do I do now with my shares? So if I if I own it, whoops, where are we here? One day. A lot of lines, right? But they help trade. So let's see. Let me get them out. If I own it and I didn't get out here, I can probably stay in it, but I have to know that the sellers are in charge. Any bounce towards 115 to 118 is going to be sold. Worst case scenario, if it comes to 120 and a half, it's definitely not the place to start long. This alert will probably tell me, hey, maybe it's shortable, because that's behavior, comes in short. So check it out. So if this is the dashed orange line, it's a little alert I have. So look left in that alert. This was a major accident scene, a major turnaround scene, couple of times, and right here as well. So it is quite an important line, has been for a while. So I don't like to make decisions at those lines. They're usually they stand until they get taken out with conviction. So in this case, I have no conviction. All right, so what about Fibonacci people that like to see, okay, retracement levels, let's say. So we have one extension from COVID, the bottom, to this, and the 50% is right here, which is almost to fill the whole gap. Okay, so coincidence, don't know. Okay, one candle just stuck out to me, and I'm going to take these fibs out. Take this out. Just lost it. Oh, this one. All right, right at 96.27. Now, don't call me. Don't start commenting. Screw you, 96. What the hell, man? I'm just showing areas of interest. Is it a coincidence that it's a doji, a giant doji? This is a daily candle. And it matches exactly with closing the gap, and it matches exactly with this bottom and this one anyway. So it's an important line to watch. In fact, I'm going to put a line right there myself. Oh, forget that. We're still in doji mode. I mean, Fibonacci mode. Need line mode. All right, we'll put it and fix it. So trading a chart, especially a stock this active and this emotional, I need technical help for it, because I have whatever I have thesis on it, and then I need help trading it. And this would be trading it without knowing levels is being at a disadvantage. I say it all the time, because the other side has it. Who's the other side? Machines. If you're trading, they say 90% of trading is done by machines. Well, guess what? Machines don't look at a chart and say, hey, it looks kind of long. It looks at history, and what history is just price, prior price. So that's why these things matter. Anyway, hopefully this helps. As far as my gut says, it's going to follow the market, and my gut on the market is we're ready to turn around. We have a little bit of a, what are we here? Just under 30. 3,000, maybe another 30 points, and then we have to take another dip. How deep? I don't know. You tell me. The macro is pretty ugly, and I'm usually a bullish guy, but I do see a lot of reasons to turn around. So if this stock is not rallying with the markets, then if the markets turn around, this guy is vulnerable to a bigger decline. So I think I said 35. I'm trying to find a pattern that would bring me to 35. So let me reset. Well, I drew this, and what the hell is that guy talking about? It came down to 57 from up here. So where is 35? 35. The point of control. Oh, okay. So here's how I probably say. I should go watch it. Okay. The point of control for the last for here from 2017 on is just over 39. What does that mean? This is where they traded it the most, from here to here. This is fact, buddy. I didn't make this shit up. This is fact. These volume bars, if you lay them out here, it's down here. The collection is down here. The most is down here. Okay, so this thing needs to do whatever it does to move this line up. How does it do that? By consolidating, quote unquote. That's what consolidating means. It needs to trade up here more to move that yellow line up to get a better floor. That's why on the first blip, it went there. They tried to. So don't know where this was last time. I'll probably go watch the video. They probably moved up a little bit because it just had more volume happen, not because that it happened higher. So we'll see how that happened. So if you're not happy with an alert to avoid this, if you're not happy with an alert to avoid this, then maybe you should just find a fortune teller that could tell you better than this. This stock is in the hand of the sellers, and right now there's no indication that it's going to change anytime soon, so I would be leery of chasing upsides without specific triggers. Nick signing out.